Looking at the financial system from any angle, you will see weakness. You can't ignore it. There's so much debt, massive deficits, major concerns over trade issues escalating further, currency devaluation, and of course, interest rates rising. Historically, having reasonable interest rates was a good thing. It encouraged sound investment. Well, times have certainly changed. You came here for the truth, so let me unveil that for you. Today we're going to look at several economic indicators. Let's begin by looking at what has happened in the previous trading day. This shows us that stocks closed lower on Wednesday after the Federal Reserve's latest monetary policy announcement hinted at higher inflation ahead. So you will see what happened with the markets. The Dow Jones again broke below that 24,000 mark, and this is of course very significant. It hasn't been able to get back to where it was before. The S&P is also struggling, and the only winner was Apple. So the Federal Reserve has decided at this time to keep interest rates where they are, but they cited the fact that inflation is around that 2% mark. Of course, not real inflation, but their core inflation rates. Then we had Snapchat. After Snap stock crash, Wall Street analysts see more pain. After a massive earnings miss, Snap stocks fell as much as 20%. We think the negative news around Snap will continue and they'll have some issues. But think about that. 20%. If a stock drops 20% in one day, well, we would have massive panic. But because it's happening now at a time when so many other stocks have risen dramatically, nobody's freaking out about it. Snapchat is considered by many to be a pump and dump. A lot of people thought that this was garbage to begin with, and ultimately there are so many people using this app. There's potential there because of so many people being on this platform. But look at the stock. So stock performance doesn't necessarily have anything to do with the company's performance. They could be related, they may not be related. There's so many factors that need to be addressed. If anybody is doing any investing in any particular asset class, there could be a substantial correction in the markets. That's according to Mobius. A 30 to 40% adjustment is not unreasonable. And so he's mentioning 30 to 40%. Historically, that would be quite low for a market crash, but it is possible that it would return to normal levels after only that amount. But that doesn't address the root cause of the problem, of course, because if the derivatives would begin to unravel, as we just saw just the tip of the iceberg back during the financial crisis of how ridiculous derivatives have become, seeing that again today would mean an even worse scenario. The catalyst, I believe, will come from continuing increases in interest rates. The Fed is definitely moving in that direction. When the Fed moves, everybody else has got to move in that direction. Any event could also be a trigger. Most importantly, we've seen this long bull market that needs a correction. So I'll talk about that long bull market in just a moment, but wanted to note the fact that he's mentioning similar things that I talk about. The interest rates increasing as well as any potential event could be a trigger. I'm looking at interest rates as my primary indicator, of course. So let's go and look at this. 100% of the time, when they increase interest rates, it results in a recession. It might be hard to see for yourself here, but the shaded light blue area is a recession. So you could see, however you want to look at it, every time around, there's always a recession. They try to increase, and so the market comes down. They try to increase, and the market comes down. Every time the Fed tries to do this, they cause a crash. Look at what happened in 1980, of course. It just cannot be ignored. And I don't know why people are being very, very senseless right now at this time when we have this type of information. It's happening again, everybody. It's happening again. We need to understand this. And it doesn't have to get to the levels we had seen before. It doesn't have to get to 5% or maybe 6 or 7% or 8%. It doesn't have to get to these levels. We need to look at the LIBOR. We need to look at the Fed funds rate. We need to look at to all the central banks around the world and see what they're up to. Fed balance sheet changes versus the S&P 500. You can see that liquidity is drying up at this time. I'm noticing the fact that the S&P has been struggling here, and ultimately that's not a good sign for all of these different moving averages that are starting to get out of whack. So any traders or algorithms are going to be looking at this, and they're showing weakness here at this time. You can see down here rolling four-week change in the balance sheet, and it looks like we have a big problem when it comes to the Fed and their monetary stimulus. Ultimately, liquidity, as I've said, is drying up. Stocks have priced in twice the rate of growth of earnings per share. Now, this is not a good thing when you try to engage in, pumping up all of the different stocks, all the different markets in an effort to save yourself. This is what's going on right now. Looking at this indicator here is just one of many. Wanted to mention it. Moving on. U.S. business cycle expansion in months. We are now at the second longest in history officially. And as I've said before, won't take much to pass and become the longest expansion in history. If it does, certainly we will have a nice, healthy crash on the way down. 46% favor government guaranteed jobs for all. If you talk to people in Canada, I bet you the numbers would probably be at least 70%. That's my prediction. I mean, I've never had a conversation with anybody, and I've asked similar questions to this. Would you want the government basically to take care of everything? And I'm being very generous because I've basically never had anybody tell me otherwise. They want the government to do everything. Provide all the jobs, provide benefits to everybody, being able to give people every service they've ever asked for, but yet again, bring taxes down. And it doesn't work like that. You want them to do as little as possible, have the free market handle as much as they can, and you can then wean off of them. You can wean off taxes as a result. But it doesn't work like that these days because the people generally want the government to do more and more and more. Not a good thing. Well, you can see this. Goldman Sachs was fined a whopping $55 million. Okay. What do they do? Well, unsafe and unsound conduct in its foreign exchange trading business. Engaged in questionable conduct to improperly affect foreign exchange markets. To me, that sounds like manipulating Forex. All right, so they were charged $55 million, but certainly they have made billions doing it. So for Goldman Sachs, it's worth doing all the time. They're not going to give up on it. If they've made more than $55 million doing it, well then it's a no-brainer to continue this. Don't worry though, they have half of their alumni working in the high positions of power in the current administration, and previous to that, and the future ones as well. Amazon.com is offering to pass along the discounts it gets on credit card fees to other retailers if they use its online payments service. So they are trying to basically take advantage of their system that they have in place. They have all these people coming through and they're using their different credit cards, they're using these different payment systems. Why not make that money off of it, or even be able to, take the profit from themselves, make no money, and be able to really, really stretch how much the individual consumer is saving. So if they can save that 2%, then that makes a huge difference. Amazon clearly wants everybody to be hooked. They do it, very, very well. Their systems are put in place to make sure that people are coming back for more. They'll take a loss on a lot of their services because they want people in their systems. Something I noted, wanted to bring it to you. That's all for this video. If you found it informative, please give me a thumbs up. Last but not least, if you found this video informative, I know that you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books. All you have to do is go over to Amazon. There's a look inside feature. It's going to allow you to flip through the pages of these books to see if you like them. Take care.